Rasamu is a retailer of computer software. The following balances were in his books on 31st December 2022. So this is basically like his trial balance. Right, we've got all this information here. All right. Then on 31st December 2022, Rasamu inspected his books and found the following errors. Says, yes, is that a question? Yes, Madam Evelyn. Madam Evelyn, do you have a question? You raise your hand. Okay. Is everybody able to see my screen? Okay. Maybe just wait for some time it will show. Just maybe give it a few seconds. Yes, network has been very bad, so that's why I'm recording this so that in case for those who are not able to hear me clearly will see the screen at the moment. At least you have a video to refer to. But how about now, Mr. Venasio? Are you able to see? Okay, good. Yes, and even they are breaking. Okay. So yes, the first error, purchase of 1,800 had been returned to the supplier Global ICT. No entries for the returns had been made in the books. So colleagues, we as Rasamu returned goods to our supplier worth 1,800. All right, so let's look for Global ICT here. Right, won't find Global ICT. They are going to be found in the trade payables. All right, Global ICT is going to be found here in the trade payables. Usually in a trial balance, they don't want to list the payables individually, so they'll total them up. So Global ICT is found here. Now, whenever you return goods to your supplier, that's called purchase returns. Does anyone remember the journal entry for purchase returns? Okay, so the journal entry for purchase returns is you're going to debit the payable, right? The payable is a liability. A decrease in a liability is debited. So you debit the payable, all right? Then you're going to credit purchase returns, right? Purchase returns is a contra expense account. It reduces the purchase expense. All right. So I have my solutions here. All right. So we debit the trade payables 1,800. Since Global ICT is in there, we can also debit Global ICT since they're part of the payables. But here in general, we just say we debit the payables, trade payables 1,800, and we credit purchase returns 1,800. So by doing this, our trade payables account has to reduce, right? Because remember, the trade payables, just show this with the T accounts. The trade payables is a liability account. All right. So their balance would be here. So their balance, it was 28,500. So this is how much we are owing people. Now, since there is a debit entry of 1,800 here, so this, our trade payables must reduce. All right. So therefore, we're going to say 28,500 minus 1,800. Get your calculators. I already made the solution. So for your verification sake, get your calculators. Yeah. So 28,350, which is the payables amount, minus 1,800 is 26,550. All right. Here it was supposed to be 28,350. So when you deduct them, it becomes 26,550. All right. Then also our purchase returns. All right. We have to include these purchase returns. So we're going to add it to our purchase returns amount. So let's see on the purchase returns. Its purchase returns is 20,300. All right. So we have to add a 1,800. So 20,300 plus 1,800, you get 22,100. All right. So these are the new balances for trade payables and purchase returns. All right. The balances have been adjusted. Any questions before we go further? Now, I was asking if there are any questions after what I've explained. Excuse me. If there are any questions or queries before we go to the next one, the next error that was seen. Okay, we can go to the next one. Drawings made by Rasamu 900 had been posted to the wages account. All right, colleagues, what are drawings? Mm-mm. Yes, yes. Remove ban for personal use. So now these drawings of 900 quads. Mm-hmm. So now this it's contra equity account or contra capital account of the type of account. It reduces capital. Whenever you do any drawings, yes, you debit drawings and you credit cash. Yes. Yeah. So now here, this guy credited cash, but instead of debiting drawings 900, is he debited it to the wages account. Okay. So in the wages account, there's a 900 that's not supposed to be there. All right. So we need to remove that 900 from the wages account and take it to the drawings account. All right. So to do that, oh, you're breaking, sir. You're breaking. Maybe type what you're saying if it's a question, because I can't make out anything. So if you can kindly type what you're saying. Yes, yes, yes. Yes. So colleagues, the person, right, when they did the drawing, what they did is they debited wages 900 and they credited cash 900. Cash or bank 900. Okay, let me just see what has been typed. Yes, yes, yes. We're spotting errors. As you can see in the question here, they said after Rasamu inspected his books, there were some errors that were found. All right. So we are correcting these errors first. So meaning some balances in this trial balance are going to change. Okay. So yes, we are spotting error. We are correcting the mistakes that were already spotted. So yes, as I was saying, yes, instead of debiting drawings, it's debited wages. Okay, so we have to remove this 900 from the wages account and take it to the drawings account. All right, so you can imagine this is the wages account. It has a 900 here. All right, we have the drawings account. So to remove this 900, which is on the debit side, we have to credit. So we credit wages 900. 900 minus 900, 0. So we've removed the 900 from the wages. So since we've credited wages, we're going to debit drawings. So drawings has to have a 900 here. All right. I can get you. Okay, here. This screen here. Oh, unfortunately, I can't get what you're saying. You're breaking on my side. If anyone has heard the question, can you maybe, Mr. Benato, I can't. You're breaking on my side. You say something, it breaks, so I'm not able to get anything. That's the problem. Not able to hear you properly. Maybe has anyone heard the question clearly? Okay, yes, please type. Please type. Okay, yes. So as I was saying, yes. So the drawings amount has to go up by 900. So if we check on our trial balance, uh, drawings was how much? 22,000. So you're going to say 22,000 plus 900, 22,900. Then wages, right? The amount also must drop by 900. All right. So the wages amount is 40,800. All right. So the must drop by 900. That signals that that 900 drawings has been removed. So you say 40,800 minus 900, you get 33,900. So these are the balances for drawings and wages. Any questions? Or do we show the full set of entries in? Oh, I was saying since number two just says there was 900. Should we assume that there was nothing posted to the drawings account? Yes, nothing was posted to the drawings account. It was posted to the wages account instead. The cash entry was correctly posted. This is a single entry error. So the cash entry, that credit was correct. But instead of posting the 900 to the drawings, it was posted to wages. So nothing was posted to drawings. And do we show the full set of entries in this case? Yes, you have to show the set of entries because yeah, the balances on the trial balance are changing. So you have to show these entries, so to show how you're making these balances change. Hope I've answered your question. Okay. Number three, the entries for the payment made by check for electricity 1,150 were reversed in the books. All right. So there was a payment for electricity. Then what happens? They've reversed it. So what do we have to do? We have to now reverse again to show that there's been a payment. All right. So what happened originally, all right? We paid for electricity by check. So you're going to say, okay, since you're paying for electricity, you debit. Every time you incur an expense, you debit. So you debit electricity 1,150. Then you credit bank since the payment was made by check 1,150. All right. This was what was originally done and what is it's supposed to be. Now what happens? These entries were reversed. All right. So meaning it was bank 1 150 and electricity 150. All right, so this was reversed. So to correct this error, we just reverse it again. All right, we just reverse it. We have to credit bank 150 and we have to debit electricity 150. Oh, wait a minute, wait a minute. Actually, we have to double those entries up. Okay. So this is how it is. So these entries were reversed. So you have the bank account here and you have electricity account. Right? So now transaction was reversed. There was an error made. So here bank 150, then electricity here 150. All right. So now to correct this error, all right. As I said earlier on, I just said you debit bank 150 and you debit bank 150, then electricity was on the credit side, so you also debit electricity 150. Bank also done. The reverse entry. Electricity has 150 on the credit side and bank has 150. Okay, yeah. So this green one has to be here. Yes, so this wrong entry here where bank is debited and electricity is credited is represented by these green numbers. So as I said earlier, to correct this, you credit bank 150 and you debit electricity 150. But when you do this, it just makes the balance zero. All right. We've just cleared the error, but we haven't shown that we've actually paid for electricity by the bank. We have just cleared the error. So that's why we need to double it so that after we clear the error, we can now put the correct entry where bank has to be credited 150 and electricity has to be debited 150. All right. So the correct entry, instead of just put 150 here, you have to double it. All right. Once you double it like this, where you credit bank 2,300 and debit electricity 2,300, what happens is first you've corrected the error and then you've left the correct transaction where you have paid by bank 1,150 and we have to debit electricity 1,150. I hope I was clear. Are there any questions? So let me just explain one more time. So Rasamu paid for electricity, but the entry was reversed. So the reversed entry was here where bank is debited and electricity is credited. So how we correct this error, all right? We need to double the amount that we're going to credit to bank and that we're going to debit to electricity. The reason why we're doubling the amount is because, as you can see, the first 1,150 clears the error, all right? Meaning the error has been cleared, but the transaction hasn't yet been recorded. You just cleared the error. So that's why we doubled it. So once the error is cleared, then the amounts can be put on the correct side of the transactions where bank, there's a credit entry of 1,150 showing that we've paid for electricity. And on electricity, there should be a debit entry of 1,150, also representing that we have paid for electricity. All right. So the correct journal entry is going to be this. You're going to credit bank 2,300 and you're going to debit electricity 2,300. Yes. Any questions, colleagues, before we move further? I hope I've clarified this. Any questions? So let's see what happens to the electricity and the bank accounts. So there's the electricity and water account, which is here, electricity and water. Where is that? Yes, electricity and water, 9,700. So this is an expense account. There's been a debit entry of 2,300. So you're going to add 2,300 to this amount, right? If you remember in our error for correction, we're debiting electricity 2,300. So we add it to the expense. Then the bank account, you need to credit 2,300. Or may we see the question again? Okay, here it is. This one here, that's the one we're looking at. That's the one we were looking at. So bank needs to decrease by 2,300. Yes. So this is the new balance for electricity and water. This is the new balance for bank. If there are any questions, feel free to ask before we go to the second part. Oh, so we've already done part A. Prepare the journal entries to correct the errors found on 31st December 2022. So as I said, the journal entries are going to be these ones here. For the first error for the purchase returns, this one. For the drawings, this journal entry. For this third one, it's this way: debit electricity 23 and credit bank 23. That's part A of the question. Okay, so after that, we also now have additional information, right? Whenever I doing these questions for financial statements, always come to the additional information, all right? Because this is where more adjustments are going to be made. So here, inventory 51,100. This is the closing inventory. Okay, that's the closing inventory. The opening inventory is in the trial balance. Closing inventory is given to you, right? Next, wages 3,700 were accrued. Colleagues, what's an accrual? What is an accrual? And this is an accrued. Wages is an expense, so this is an accrued expense. So what is an accrual? Anybody to give it a try? Accrued expenses, these are expenses that build up, all right? For example, like wages. Obviously, Rasamu had to pay wages at a certain period, so he wasn't able to pay, so that expense is going to be carried on, all right? So accrued expenses are expenses that build up, right? For example, your water bill, you might get it this month, you don't pay. The next month it comes, you don't pay. The other month, you don't pay. It starts building up. That's an accrued expense. So this accrual, all right, is more like a liability. So in the statement of financial position, under current liabilities, you're going to put in accrued wages. Then the second thing that you're also going to do is this 3,700, you're going to add it to the wages amount. All right. I believe we all know the accruals concept. So for wages, wages plus accrual, 39,900. That was our new wages amount. Here, this 39,900. Don't make a mistake of going back there again. No, it's this new one, 39,900. You add it with the accrued wages, which is for 3,600. So this is the new balance of wages on the in the uh, profit or loss account. All right. And as I've listed here, 3,700 will be a current liability in the balance sheet. Any questions? Advertising expenses include a 4,000 payment for a campaign running from 1st December 2022 to 31st March 2023. Right. So this advertising we paid in November and it runs into the next year. All right. So this is a prepayment. The prepayment is the remaining amount for the next year because this payment was made on 1st November. All right. And and our year ends in 31st December. So we have to calculate how much of the advertising expense we incurred at the year end, and then the remainder of the amount will be our prepayment. All right. We have to find out how much of the advertising expense was incurred, and the remainder is the prepayment. So prepayments, remember, they are assets, current assets. So when you find that prepayment, you list it as a current asset. And the prepayment, again, the other adjustment you do is you're going to deduct it from the advertising expense. All right. So the first thing we need to do is we need to find out how much of this advertising expense was incurred from 1st November to the end of the year, 31st December. But before we do that, let's calculate how many months are from 1st November 2022 to 31st March 2023. November, December, January, February, March. 5 months. So this advertising, this payment is for 5 months. All right. So the total bill is 4,000. So we need to know how much is first the monthly payments. So to get the monthly payments, you say 4,000 divided by 5 months, you get 800 kwacha per month. All right. This is the monthly payment. Okay. So now we want to find out how much of the expense was incurred. So from 1st November to 31st December, that is 2 months. So 2 months times 800 kwacha, that is 1,600. All right. That's how much of the expense we incurred. So that's the one we should report in our statement of profit or loss. Right. The advertising expense that was incurred was 1,600. Then the remainder is the prepayment. So 4,000 minus 1,600, that's 2,400. This is the prepayment. Once you've determined what the prepayment is and how much has been incurred, as I say, the prepayment appears as a current asset in the balance sheet. All right. 24 will be a current asset in the balance sheet. Then this same 2,400, we're going to deduct it from the advertising expense. All right. On our trial balance, where's advertising? Advertising expenses 17,000. So we must deduct the prepayment from this amount. Okay. To show the expense we have incurred. So 17,000 minus 24, that's 14,600. So this is the amount for the advertising expense. 14,600. Any questions before we move further? Okay, the next one says the 5% bank loan was taken out on 1st January 2022. Half of the loan is repayable on 1st January 2023, the on 1st January 2024. Now, since this loan is repayable in 2023, and we are only dealing with 2022, right? So there will be no adjustment that you need to make, right? This loan has already been recorded here in the trial balance here, all right? So they've told us the first payment is going to be made in 1st January 2023. So in 2023, when that payment is made, it will be recorded and it will be part of the income statement there. So basically, for this one, there was no adjustment made. Unless if the loan was payable within the year, would have done that, would have made an adjustment. Depreciation is charged on all non-current assets owned at the end of the year as follows. Premises at the rate of 2% per annum on cost. Computers and equipment at the rate of 25% per annum using reducing balance method. Fixtures and fittings at the rate of 15% per annum using the straight line method. So for premises, it's easy to calculate the depreciation. You just get 2% of the cost of the premises. 2% of 22,000. What do you get here? The premises is how much? Yes. So this is the accumulated depreciation here. This balance is for accumulated depreciation. Premises is a non-current asset. So this is the amount for premises, 80,000 here. Okay. So I want you to take note of this, colleagues. When you see non-current assets with credit balances here, this is the accumulated depreciation or the allowance for depreciation. All right. So the amounts you have to look for are these debit balances because these are assets. All right. So even in the exam, please do not come here and use these amounts like I almost did. All right. You come to the debit balances. These are assets. So 2% of 80,000, 1,600. This is the depreciation expense. And you have to add it to accumulated depreciation. Remember, I told you whenever you calculate depreciation expense, the journal entry is you're going to debit the depreciation expense. Other books you're going to see you debit the statement of profit or loss. You see PL here. Then you're going to credit allowance for depreciation, sometimes also called accumulated depreciation. Allowance for depreciation. You credit it, all right? So this depreciation expense we've incurred of 1,600, we're going to add to the accumulated depreciation for premises. All right. So premises, the accumulated depreciation, 22,000. You add plus 1,600, 23,600. All right. Since they haven't told us a, a date when this was bought, so this is for the whole year. This depreciation expense is for the whole year. All right. And at the end of the year, you add it to the accumulated depreciation. Remember, assets, as we use them over time, their value goes down. So the more accumulated depreciation increases, the lower the value of the asset, which we're going to see in the balance sheet. Computers and equipment, they told us depreciation is using the reducing balance method. This is the formula for the reducing balance method. Cost minus accumulated depreciation times the rate. The cost of computers and equipment, 30,600. The accumulated depreciation, 14,000. So what is 36,600 minus 14,000, it's 16,600. All right. This is basically the value of this asset at the beginning of the year. All right. Then you multiply it by the rate, right? So the difference we multiplied by 25% because they told us we're using the reducing balance method at 25%. So you get 25% of 16,600, that's 4,150. This is the depreciation expense for the year for computers and equipment for 150. And this amount, we add it to accumulated depreciation. So in the balance sheet, we're going to see the value of these computers and equipment in the at 31st December 2022. Okay, then fixtures and fittings, straight line method, same as how we got for premises. You just get 15% times 16,000. All right, this is the cost of fixture and fittings, 2,400. This is the depreciation expense for the year, fixtures and fittings. Then we add it to accumulated depreciation, 96 plus 24, 12,000. So these accumulated depreciation amounts, this 18,150, 23,600, and 12. We're going to see them in the statement of financial position on the part for the non-current assets. Any questions before we go further? A debt of 2,500 is considered irrecoverable, meaning we are not getting this money back. So, in your if you want in the balance sheet, you can show the deduction. You deduct this from trade receivables, right? But for us, I deducted it earlier, as you will see in the workings. All right. The amount for trade receivables is how much? 37,500. So now there's 2,500 that we're not going to get. So we need to deduct 2,500 from 37,500. All right. So what did we get? We need 37,500 minus 25, 35,000. This is the new balance for the trade receivables on the statement of financial position. This will be the new amount for receivables. Then they've told us an allowance is to be maintained on all remaining debts at 4% of trade receivables. So this is the allowance or provision for doubtful debts. This is an estimate which was saying we might not get. We're estimating we might not get. Unlike bad debts, which are certain that you won't get, not 100%, but let's say 95%, because maybe someone can go bankrupt, then after some time they get money, then they'll pay you later on. But 95% certain, 95% confidence level that you won't get this to 5. But this 4% is just an estimate. Because remember, whenever you do credit sales, you won't, not everyone's going to pay you the full amount. So we have to find the new allowance for trade receivables, and we need to first also check in our trial balance if we have an existing amount, of which we do here. At the beginning of the year, we estimated we might not get 1,200 from our customers. Now, at the end of the year, what has our expectation grown to? So we calculate the allowance for receivables. So you get 4% of 35,000, because this is the remaining amount for the receivables, which is 1,400. So this year we're expecting not to get 1,400. All right. At the beginning of the year, we're expecting not to get 1,200, but later on, we're expecting not to get 1,400, which means there's an increase in our allowance. Because at the beginning, you're expecting not to get 1,200. Now you're not expecting to get 1,400. So meaning there's an increase. So an increase in the allowance for doubtful debts is treated as an expense in the statement of profit or loss. All right. Because now we're expecting we might not get more money from our receivables. So you say 1,400 minus 1,200, there's a 200 kwacha increase. So this 200 kwacha increase is the expense that you're going to find in the statement of profit or loss. All right. Find that in the statement of profit or loss. And then this 1,400, this new allowance for receivables, we're also going to deduct it from the receivables amount in the balance sheet. All right. We're also going to deduct it. I haven't deducted it here, but it will be deducted in the balance sheet. If you wanted, you could also deduct it here. So, any questions, colleagues? We have done all the adjustments. The next part is the statement of the financial statements. So, any questions on these um, adjustments we've looked at so far? We call it a night. I share the same assignment.